Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. The top headlines. Benchmark indices open flat and global weakness and higher crude oil prices. VIX cools off in the opening session. And open interest in mid-cap IT stocks surge as after traders take fresh positions in several of these IT companies. TCS is the top gainer on the Nifty after the IT bellwether reported the best dollar revenue growth in 14 quarters and beating street estimates on most parameters. And Fortis Healthcare surges as much as 2% after the board approves the formation of a committee to evaluate binding offers. And Indian bond yields spike more than 1% today after the MPC minutes hinted of a more hawkish policy in the future.
All right, those are the top headlines at this hour. Let's take a look as to what's happening in the futures and options market. It's definitely been a muted start, but we've seen some bit of selling pressure now in the markets. If you could just pull up Nifty, which is now trading with cuts of almost 21 points, 10,544 is the level where Nifty is currently trading. Pull up the futures as well. Remember, the futures today, this morning, have been trading at a discount, not a very good sign. Futures trading with a discount of almost 2 points as we speak. And the Bank Nifty futures and Bank Nifty both are in focus as the spot Bank Nifty has breached the 25,000 mark. Remember, that was a major support on the index. So that slipped nearly 180 points this morning, and the futures of Bank Nifty are trading at a discount of nearly 4 points as we speak. Well, as Agam highlighted in the headlines, that some bit of open interest addition has been seen for IT stocks, and clearly Nifty IT is the top sectoral gainer in today's session as we speak. The Nifty IT index is up as much as 3.5%, and metal stocks have seen a bit of cool off. So the Nifty metals index has seen a bit of selling pressure in today's trade. But talking about the options data, what's happening there? The 10,500 and the 10,600. So now once again the out of the money call strikes have become active. 10,500 has added nearly 3.5 lakh shares, and the 10,600 strike has added about 4 lakh shares as we speak. On the put side, you've got the 10,500 strike, which has added 1.7 lakh shares. Remember, that's the strike which is sitting with maximum open interest so far. And the 10,400 as well as the 10,300 put strikes have been active in the opening session. In terms of what the FIs have been doing till now, well, they've been building on long position and covering some of their shorts on index futures. So if you look at long to short ratio, which is still below 1, but it's been inching higher. Currently, it stands somewhere about 0.6. So let's see if the long to short ratio can touch the mark of 1, which most of the derivatives analysts have been watching out for.
Right. Well, Navneet, there's no prize for guessing. The top buzzing sector, of course, in today's day of trade is the mid-cap IT sector. Actually, I'm not going to leave TCS out in the fray, but before that, I'd like to address Mindtree on your screens out there. Is looking at another 21.5%, addition towards open interest in towards longs. NIT Technologies, KPIT Technologies not too far behind. We've also had more traction come in Hexaware Tech. On the losing end, we're looking at weakness in those two PSU banks, as you can see out there on your screen. Big shorts build up coming in for Bank of India as well as Canara Bank. Both these are declining by quite an extent. In fact, Bank of India is taking a knock of as much as nearly 6% in today's day of trade. So while on the gaining end, we have substantial traction building in the information technology space and mid caps as well as the large caps, we're looking at more weakness in the likes of Bank of India and Canara Bank. Let's also take a look at the list of all the stocks which are looking at decline in open interest. V-Guard Industries, of course, which did see substantial gains yesterday, is looking at a little bit of unwinding in today's day of trade. But other than that, we have very little change in L&T Finance Holding, MGL, Ambuja Cements, and IndusInd Bank. Today's day of trade will most certainly be about the information technology sector.
That's right, Agam, and some support coming in there, or else we would have seen more cuts coming in for Nifty in today's session. But before we get our guest in the show, here's a reminder: if you have any queries in the futures and options market, please call us now on 022-4540-4141. You can also write to us on our social media platforms, Twitter, Facebook, and the ones who are watching us on YouTube. You can put your queries there, but do not forget to put that all-important hashtag of AskBQ. Let's welcome our F&O experts for the day then. Thakkar of Anand, Rathi and Navneet Daga of IIFL Wealth are joining us on the show now. Good morning to both of you gentlemen. Navneet, let me come to you first. The momentum has been on the upside in the last at least 11 to 12 trading session. Considering the dip that we've seen so far, would you use that as an opportunity to create fresh longs or would you stay away?
Well, good morning. Look, the index is at least in a no man's land. It's looking likely that it will. It's looking likely that it might consolidate in the band of that 100 points of 10,600 on the higher side, because it's being the impending resistance point. And similarly, on the lower side, the kind of put writing that we have seen of 10,500 doesn't look to me that it will break either that level that easily. So, in the fag end of the expiry, it's looking likely that we might see a more consolidation in next 3 to 4 trading sessions, and we might find the Nifty in this 100-point band itself. But however, the larger trades are happening on the broader markets, and that's where stock-specific ideas have been performing well. So, we'll be more focused on that side.
Okay, that's Navneet's view on the benchmarks right now. Jay, good morning to you as well. How are you viewing trade on the indices? Is the recent up move there to stay, or can we expect consolidation now?
Hi, good morning to both of you. I think that the current move is likely to continue on the upside. The reason being is the today's mainly focused sector, and that's IT, and I have been in fact calling for a bottom as well as a rally in the sector of the year on IT since past couple of months. I would say since December 2017 I've been saying, and then it's been forming new highs now, and I think yes, it's still likely to inch higher. My target for the year remains intact. That's 18,300, which I've been continuously saying right from the 10 to 11,000 on Nifty IT. I think IT is one sector which will continue to drive the market on the upside. Any dip, the support will be provided by the IT sector. The large caps, in fact, are looking still good. Infosys, maybe or TCS, Wipro, HCL Tech. Those all are looking good, and I think whatever correction had to happen, in these stocks have happened, and now again the up move has resumed. This is one sector which is likely to provide a good support at the lower levels. It's just the banking sector, I would say that that's under pressure, and the kind of rally which we have seen 2,000 point approximately coming in Bank Nifty in the last couple of trading weeks. So some profit booking cannot be ruled out there, and it's just because of the banking and the financial sector, and maybe I would say other non-banking spaces like metals, which are quite volatile. That might just add on some pressure at the higher levels, and that is what is making it difficult to inch, making it difficult for Nifty to inch higher above the levels of say 10,630, which was earlier the peak. But I think once this things settle down, we'll again see the rally resuming on the upside. At least for the short term, I believe that 10,485 is a very crucial support for the short-term traders. For the positional traders, it's 10,400 till those levels in this series are held. The probability of a short-term move till 10,630 can't be ruled out, and once it takes up 10,630, then definitely it's a good breakout, because that was where the double top pattern was formed. So about 10,630, there is a lot of room on the upside. So watch out for these levels till the expiry now next week. That is what we have, and 10,630, 10,485. That's roughly around 150 points range is where the Nifty is trading within. That might continue till we don't see a breakout or a breakdown.
All right, that's Jay's strategy on Nifty. As he clearly mentioned, he expects a target of 10,630, and he also suggests a stop loss of 10,485. Remember, 10,630 is a level which majority of the technical analysts have been saying that's a big resistance for Nifty on the upside. So let's move on and get some option strategy. I guess Navneet Daga has option strategy for us in today's trading session. He has a short straddle on Nifty Bank, but before we discuss that, let's find out what that exactly means. A short straddle is when one sells at the money calls and puts in anticipation of decrease in volatility. When volatility decreases, followed by contraction in option premium, the strategy becomes profitable. Navneet, over to you. Take us through your short straddle on Bank Nifty.
Look, as we discussed that I'm expecting a lot of consolidation in the market, and there is likely chances that we might surmise in this 100 points range with the Nifty and somewhere in the 500 points band in the Bank Nifty as well. Having a similar view, looking at the options data, Bank Nifty, if you look out the 25,000 call and put data both, if I combine the total open interest is almost 40%, almost 70% of the total futures open interest in the Bank Nifty. So it's looking likely that the 25,000 strike price would become a pain point for the market, and there's a chances that Bank Nifty might hover in this particular band itself. So I'm selling in 25,000 call and put options for the monthly expiry, that is the 26th of April. The combined premium that we are receiving somewhere in the range of 380 to 400 points. I'd expect that the premium to shrink down because of the theta decay and vega decay for the next coming week or so. So my targets in this strategy is almost 120 points to 200 points on the total spread, and I'll keep a very strict stop loss if that spreads widens towards 480 odd levels on the Bank Nifty 25,000 call and put.
Okay, so that's the short straddle on the Bank Nifty coming in from Navneet, and we're getting a lot of queries right now. So before we start getting in and addressing queries, let's just take what our experts have to recommend for our viewers. Jay, I'm going to come back to you. You have 3 long calls, and one of them is interestingly Infosys, which, where the entire information technology pack is buzzing. Can you take us through your calls for the day?
Definitely. See, I have... in fact, since this is the F&O show, so definitely, I would be recommending more of the F&O trades, but there would be one cash idea as well from the same sector, which I would like to recommend. Initially, I would come to the, futures calls, and that's on Infosys, because see, this stock has been consolidating within the range of around, say, 1185 to almost 1100 on the lower side, and the range is getting narrower and narrower, and in that process, it has formed a good symmetrical triangle pattern on the daily charts, and I'm expecting a breakout from the same on the upside. The reason being is that, it seems to have completed the wave E of this consolidation, which is the last leg of any consolidation. And post results, we had seen that Infy was under pressure, and it had fallen right from the levels of 1200 to 1100. So we saw that 8% cut coming in Infy post result. But then with the overall IT sector doing quite good, the results of Mindtree, you say, or TCS, you say, are coming quite good, and Infosys results were also quite in line with expectation. But the guidance for the IT sector is too coming quite positive, that is in double digits growth and all. So I think that is definitely going to help out the sector as well as the stocks like Infosys as well, and we are seeing some good long build up happening in today's trading session in Infosys. The probability of this stock inching towards the levels of and breaking out, in fact, eventually on the upside, the levels of 1185 is quite high, and thereafter inching towards 1250 is quite good. So till the expiry, I think Infosys is likely to head towards 1250. That's the short term target. The stop loss on the lower side will be 1130. The second buy recommendation I've got is on India Cements. Now see, cement pack has recently done quite good, and India Cements has formed a good inverse head and shoulders pattern on the daily charts. The right shoulder of the same seems to have gotten complete. The short term target comes to 159. One can buy this with a stop loss of 148. Ashok Leyland is another stock, and which is quite in action in today's trading session. If you see that there is good amount of long bid up seen in this series, the stock is continuously forming high tops and high bottom. And the kind of long build up we have seen in this stock, the probability of this stock inching towards the levels of, say, almost 157 is quite high. One can buy this with a stop loss of 149. And one cash stock, which I had said that, since it is an F&O show, but I would, however, like to recommend, because it has provided a good breakout on the upside from the right rectangular pattern, and that's on Cerebra. Cerebra has clearly broken out from the levels of 60, 62, that was the resistance earlier, and now that will act as a very crucial support. So with the stop loss of 62, one can buy Cerebra, targeting around 85 to 90, coming in, say, around a week or so.
Okay, those are some strategies coming in on stock futures. Also, Jay highlighted Cerebra for the cash segment. But Navneet, coming to you, you have 2 long calls for the day, and the stocks that you've chosen, we've been observing some fresh long positions being building up for them in the last few sessions.
That's what it is. I like the stocks whereby a lot of momentum trade has been visible, some kind of traders interest has been visible, as well as some chart breakouts, and the stocks is finding some gravity on the lower side as well. So as we discussed, a lot of traction has been visible on a lot of mid-cap IT stocks, and a few of the stocks which have been adding a huge amount of open interest as well as chart breakout. Is one of stock which caught my eye was KPIT Cummins. This stock has been heavily smalled up about 230 odd levels, and today after the kind of a build-up that he has seen. My confidence build-up is quite high in the stock. It's looking likely that this breakout momentum might continue. My initial targets on the higher side is 252 and keeping a strict stop loss of 230. One can still look to enter into this trade in the current market price. The second stock is on is likes of V-Guard. The V-Guard has seen a good amount of open interest. Again, the continuation of a high top, high bottom formation continues. And to my understanding, the stock is also looking likely that it might inch towards 260 odd levels. With a small stop loss of 242, one can still enter into this trade. And today's session, it seems some kind of an unwinding happening, but one should look to buy this weakness in this stock. Overall, the chart pattern suggests that the momentum might continue on the upside.
Okay, so those are some of those strategies coming in from our experts, and I'm going to quickly go across to our viewer queries, and we have a caller right at the top. The first one is Rajni Kharbanda, if I'm not mistaken. She's calling from Kanpur. Hi, Rajni. Thanks for joining us. And if you can hear us, tell us what would you like to know from our experts.
Hi, good morning, sir. Actually, I have one lot of Manappuram Finance at the rate of 120.85 for April series. Please suggest stop loss and target.
Okay, there you have it. Manappuram Finance a lot and futures bought at 120.85. It's currently trading at about 119. So not too far from Rajni's entrance price. That said, currently the underlying is down by as much as 1.3% and very little change in open interest. Navneet, if I can come back to you on Manappuram Finance right now, what would you advise Rajni should do with her position on this particular futures?
Look, this stock has been quite smartly held, and I'm quite surprised the kind of move that I've seen even in the falling market when the NBFCs were underperforming. So this stock shows that there's a lot of potential is still there in the stock. But however, there's a stiff resistance or hurdle on the higher side of 124 to 125 range. And the entry price is very much near to that range. So I'll say that that's the likely chances that we might see some kind of more retracement. I'll keep a very strict stop loss level on the lower side of 116, that is 116 level. If that level has been again taken out, it's looking likely that the stock might continue to grind in that particular band of 125 to 110. But however, if that level has been held on, supported, to my understanding, there is a greater chances that we might see a breakout trade happening on the higher side. So it might be a time-consuming stock, but I'll keep a strict stop loss on the lower side of 116 on this stock.
Okay, that's the view coming in on Manappuram Finance. Thanks a lot, Rajni, for calling us. I think we've got one more caller. Mufaddal calls us. Hi, Mufaddal. Good morning. Thanks a lot for calling us. Tell us what you want to know from our experts.
Yes, hi, Navneet. Good morning. I bought one lot of Tata Steel call option 640 at around 4.4 rupees.
Okay.
Please suggest me what to do.
It's for the current series, April series?
Yes, current series.
Okay. I guess the premium on the 640, which is out of the money call strike, seems to have fallen. If you could just pull up that. But Jay, I'm going to come to you. What would you advise him to do? He's got the 640 call strike of Tata Steel at 4.4. The current premium is quoting at about 1.7. Should he hold on till expiry or book out right away?
I think you should book out, definitely. See, we have seen a good rally coming in the metals pack in the past couple of trading sessions, but then overall I think that for this series, metals have run up quite a lot, and we have seen a decent short covering as well as a bounce back, you say. And now, expiry approaching near, if at all we see any consolidation further happening in the index, and if it doesn't break out from this range, and if we don't see a breakout on the upside, I don't see this sector, in fact, to again bounce back on the upside, because we have seen a decent bounce back coming in or a rally coming in the international commodities as well, and it's time to settle down now. So avoid continue holding, Tata Steel call. I think it's better to, in fact, shift Navneet into the momentum sector, that is IT, and buy 1200 call options of May series of Infosys. I think that is where one can definitely recover some loss as well as make some profit out there.
Okay, Mufaddal, there you have it. That's the view coming in on your position in Tata Steel. The advice is to move out and move into a perhaps more perceivable, profitable sector. In this case, as Jay is mentioning, it is the information technology sector. We'll go on to the next query, and this one is on Facebook. It comes from Dalbir Anup Singh. Well, he's just put in plus 10,500 put. So I'm assuming that this query is with respect to the 10,500 put on which he is long on. So let's take a view on this one. Navneet, it's currently trading at 43. Do you think that the Nifty can likely, expire below this mark? And in that case, what levels would you be watching out for?
Hi Agam, look, we started start of a show. We discussed that there's a very unlikely chances that we make a dash below 10,500 level and expire below that, because the kind of an high-end put writing that we are continuously seeing, and the kind of an outperformance the IT stocks have been heavyweight IT stocks have been seeing. There's very unlikely that Nifty might fall below that level. So however, I'll wait for today somewhere in the closing. If we started to break below 10,530 odd levels, there's a chances that we might attempt to, and the gentleman might get an exit on this put options. But however, I'll keep a strict stop loss on the higher side. If we started to trade about 10,580 on the Nifty, there's very unlikely chances that you get an exit price in this. So my advice would be still one can look to exit at the current market price as well.
All right, Dalbir, that's the view coming in from Navneet. You can look to exit at current price for the 10,500 put. I'm going to quickly take our next query. This one comes on YouTube from Amol Wagh. He's holding Motherson Sumi 350 call strike at a premium of 5.6. He wants to know what to do, hold or sell. The current premium has definitely fallen from his buy price of 5.6. Jay Thakkar, I know you have to leave early today, but I'm just going to take this last query to you before I thank you on the show. What would you advise Amol to do? Should he hold or exit?
Navneet, sorry, I missed your question. It's on which stock?
It's on Motherson Sumi 350 call strike, bought at 5.6. The current premium is somewhere about 3 or 3.3.
Well, I would say this stock too, like I said for Tata Steel. In fact, this stock has seen a good amount of bounce back, and I think from these levels it is likely to remain sideways. So I would advise to maintain a stop loss of around say 2.5 on the lower side. If it manages to hold here and then again reverse on the upside, then I think one can expect it to book it at around 6.5 to 7. If at all, Motherson Sumi further falls from these levels and, breaks the levels of say almost on the lower side 341 to 340, I think then it's a risk. Then, further to expect that, this stock will move ahead of above 350 and then closing in the money would be quite difficult. So the stop loss of 250 would be quite decent for Motherson Sumi. Maintain that and continue holding that.
Okay, Jay, thanks for joining us and giving us your views on the markets, as well as helping some of our viewers there. But we'll go across to the next query, and this one comes on YouTube. This one's from Pratik Rao. He actually has two questions, both related to the information technology sector. The first one is that he's bought the TCS May 3,500 call. He's paid a premium of around 32.5. He wants to know what to do with this particular position. The second one, of course, is on Wipro. I'll come back to the Wipro query. Let's just address TCS for now, considering it's looking at a 5% up move today, largely on back of earnings. This particular call is now trading at about 45. So Pratik is sitting on a good profit as of now. Navneet, would you advise him to book profits at these levels, or would you advise him to hold on to this position as far as this TCS call goes?
Well, I would advise to just maintain hold on to this trade and maintain that basically the larger view is on the upside for TCS. We're seeing the kind of a breakout in impending resistance of somewhere near to 3,300 levels. It has broken out of that band, and since he is holding the positions for the May series, the greater chances that we might see more traction coming in for the May series for the IT stocks, as we have discussed in detail. That IT, we are seeing the chart breakout as well as open interest build up, and the chances that the continuation of momentum might be seen. So I'll advise the gentleman to hold on to that. I'll advise him to just keep a watch on the futures level at 3,300 levels. If he started to break below that level, then it means that basically the larger part of the rally has been done through, and the stock might be moving into the consolidation. That's where one should look to exit in that trade.
Okay, and there was a follow-up query to that as well. One of the laggards in the information technology sector is Wipro. So the question here is that what would trade look like if he were to buy the Wipro May 310 call? In fact, he's asking whether he should buy this particular call or sell. And this is the May call. It's currently trading at 3.35. What would you advise Pratik to do with this one, Navneet?
Well, first of all, it's been a very laggard of the stock, whereby we have not seen any major action happening, even in the kinds of overall sector has been outperforming. To my understanding, it's not a worth of stock whereby one should look to buy the call options. It's very unliquid at this point of time as well. I'm not seeing any trading volume for the day on Wipro 310 call options for the May. I would say just avoid the stock and look to focus on the other stocks that we discussed, like some Mindtree and KPIT. That's where the larger profits can be happening. So for me, it's an avoid in Wipro.
Avoid Wipro, but Infosys, that's the one which is searched in trade. Infi is also trading with gains of almost 4% around the levels of 1174. So good going for Infi as well in today's session. Let me just take one query from Facebook now. Girish Kumar wants a view on Bajaj Finance. He's asking if this is the right candidate to short. Navneet, I'm going to come to you. Bajaj Finance, can this stock be shorted at current levels?
Well, I would suggest that not to do that, largely because this stock has been giving an indication of an early breakout. There are the chances that the stock might again find a lot of traction in that 1850 odd zone. So if you're looking for a tactical short, one should look to short at the levels of somewhere into 1940 to 1950. That's where the resistance point is. At this levels, does not merit to go short on that stock. However, I look to buy on that stock and any dips towards 1840 odd levels. To me, the overall setup suggests that the stock might create a new fresh life highs about 1950 odd levels in the coming series as well.
Okay, I think we have time for just like maybe 2 or 3 more queries. The next one comes on YouTube. This one's from Sajal Thakkar. And the question is that Sajal is holding one lot of the SBI and one lot of the Karnataka Bank futures. The SBI futures has been bought at 249. It's currently trading at 242. And the Karnataka Bank futures has been bought at 122 and is currently trading at 119 or roundabouts. The question is, what can Sajal do with the positions? So as of now, making a slight loss in both these positions. Navneet, let me just start off with SBI and you can follow that up with Karnataka Bank on the views.
Look, overall trend doesn't suggest that the SBI is still out of woods. It's looking likely that this stock is facing a lot of hurdles on the higher side. Any short spikes because of the news flow, it's getting sold off into. To my understanding, it's still an exit at the current market price of 242, 243 range. It doesn't look like that the stock has a gravity to scale past about 250 levels in the current series. So to my understanding, it's better off to in the case of rising bonds yields and a lot of pressure from the dollar INR on the banking stock. So to my understanding, it does not merit to chase on the weakest stock in the overall pack. So it's an exit into an SBI. I'll say that Karnataka Bank is in a very sideways range. It does not merit that on the higher side 125 level has not been taken out convincingly. Number of times it's been testing that level, but it's failed to surpass that level. Any position should only be taken if it started to close above 125 levels. At a current market price of 118 to 119 levels, it's still looking like that if you're making a slight loss, so one should look to exit it. It doesn't look like that the stock has got strength to break out on the higher side.
Okay, that's the view coming in on these banking stocks. Karnataka Bank and Bank of India especially has seen some sharper cuts coming about in today's session. I want to thank all our viewers actually for writing in your queries. Just want to squeeze in one more query which is coming on YouTube. Sridhar Srinivas writes to us. He's holding 10,600 call. He wants to know if he should hold on till the expiry. He bought around the premium of 46 and I think the current premium now is fallen to levels of about 33. Navneet, he's making losses here, but he wants to know if he should hold on till expiry. What would be the advice be?
Well, look, we've discussed this kind of a strategy whereby if the markets are in a consolidation and if you look out for a breakout trade, it does not work because normally the options, when you buy options, you've got a lot of time value attached to it, and especially in the fag end of the expiry. Since we are only 4 days left before the expiry, the chances of making money in this trade is quite less, and even if the market moves towards 10,600 levels, it is highly unlikely that you might be able to make a profit in that trade. Overall trend is still up, but does not make merit to buy the call options for the current series. It's looking like that you lose on the time value. So to my understanding, it's still an exit at the current market price as well, and looking to save the profit, whatever the less loss that you're making, one should look to exit in that current market price as well.
All right, guys, we're getting a flood of queries right now, and unfortunately, we are running out of time on the show, so we will have your queries answered. Some of them can be taken up in Ask BQ at 12:30, and of course, the rest will also be taken up tomorrow. But with that, I want to thank Navneet for being patient with us and also taking us through the various queries that we've had for our viewers as well. And we're going to wrap this edition of the F&O Show now, but don't go anywhere. Lots more lined up, so stay tuned in the BlueBuckQuint.com.